Actually, I'm glad that you mentioned risk and return because for a lot of investors, what they look out for is only the returns, right? They will see, oh, this investment can give me 30%, 50% return, and they will just go after that, and they totally ignore the other term that is called risk, right? So yes, definitely in any investment that you take on, you have to balance between risk and return. In fact, I would say that if you know how to take care of your risk, right, the returns actually go to you naturally. So what is one way we can balance risk and return? So firstly, the kind of companies that you invest in, right, they have to be of a certain high quality. So some people, they invest just based on what they hear from their friends, what they see that's trending right now. People are talking about them on the investment forums, right? And they'll just go into those investments without even doing any research. But if you do the proper research, you need to make sure that the company today that you are investing, they are doing well financially. You look at the numbers like their top line, bottom line, looking at the financial figures or their loans, leverage ratios, all of that, they have to be in a certain healthy range, right, in order for you to actually double into that investment. So being able to sift out only the highest quality companies to invest in, that itself is already helping you to manage your risk while driving the returns for your portfolio. So that is one way. Then secondly, personally myself, right, when I invest in a company, when I invest in a stock, I don't like to just chase after the returns. A lot of people, the higher the share price goes up, the more they buy, right? Because FOMO, right? Or it could be because of greed. Okay, you see your friends all earning 20, 30, 50% returns, but you didn't invest in this, right? So you have this fear of missing out. But I try to be very disciplined and patient with the price that I buy. In fact, the higher that it goes up, right, the more I wouldn't buy it. So I want to actually buy it at a fair price, right? Which personally myself, how I do this is I actually look at the stock charts. There are many ways you can do it. Some people, they do their valuation, right? Myself, I look at the technical part, right? Technical analysis when I do the stock chart analysis. So these are actually two ways in which I mitigate risk while I drive returns. So I invest in a good company and I try to buy them at a good price. So that's the way I go about doing it and balancing the risk to return for a stock investment portfolio.